Happy Friday, everybody! Volatility, lions, tigers, bears, drama. Oh my, it is shifted a lot in the last few weeks. It's really shifted from a market, an interest rate market, bond market that was driven by economic fundamentals such as employment data and inflation data. But now we've switched to 100% headline-driven market. And your guess is as good as mine as far as what's going to happen today or over the weekend or even into next week, because it changes so rapidly. In fact, I would say sometimes we have three different rate sheets throughout the course of a day. Interest rates may start one place, change around 10, 11 o'clock, and then change again at 2 or 3 o'clock in the afternoon. So it's really hard to figure out what is actually going on with interest rates with this kind of wild volatility. As of the recording of this video, which is right around 10 o'clock on Friday, mortgage rates are around 6.62%. That's national average, 20% down in good credit, and that is up almost 0.75% from just a few weeks ago. And that's a little bit troubling because we were starting the year so great. We had inventory that was stabilizing. Amount of price drops were going down. We had buyer activity, year-over-year buyer activity trending up in a very positive fashion. And that's what the data shows right now, but we know that will change if interest rates stay above 6.5%. I think 6.5% is a really important threshold. If interest rates are above 6.5%, we tend to see the market slow down and contract. And we saw that last year. Remember the whole tariff Armageddon from last year? Yeah, it's very, very similar to what we're dealing with right now. And then in previous years when we've had interest rates above 7%, the market really kind of pulls back and contracts. Now, on the flip side, if it's below 6.5%, that's where we've seen the housing market start to recover to a little bit more healthy spot. Now, if we get below 6%, well, that's when things will really get positive for the housing market. But right now, it's kind of a watch, wait, and see. You know, if I was forced to guess, someone had a gun to my head and said, you must predict what's going on, I would guess this is going to be a little bit like the tariff Armageddon of last year. I think it's going to be a lot of drama, but I think at the end of the day, I think it's going to shake out in roughly 30, 60, 90 days, if I had to guess. That's just because that's the track record of the current administration. They understand that the market is important. They have midterm elections coming, and I think they got to figure out ways to get it sorted out in the very near future. But I don't really know. Your guess is as good as mine, and have a happy Friday. Talk to you soon.